Welcome everyone to 912 Financial Group's review of the 912 Top 20 January edition. First off, let's read what we expected when we wrote this on January 22nd. Like we said in the last issue, honestly, the beginning of the year is a crapshoot and has definitely been proven to be so. And yet, we're still within the same 3,500 to 4,100 range that we have been in for the last 4 months. Continuing the frustration of anyone that's following the intermediate and short-term trends and rewarding handsomely those that simply took our advice to go wide. And frankly, we didn't see any reason to change that course on that outlook. Through the trend trader and the intra-trend trader, suggestions do provide a decent window of forgiveness if you are adventurous. We are still in the range, and the major indexes have not convincingly moved into the intermediate uptrend. They technically are, but don't be surprised if you get stopped on the retracement of Friday's move. For the bear case, inflation is still very high, period. Earnings are down, tech is laying off a lot of people, home prices are falling, food prices are rising, and the brief relief we saw in energy prices was just that, brief. For the bull case, everything that is bearish, layoffs, falling house prices, IMS under 50, poor earnings is exactly what the Fed wanted. And the Fed could be ready to sit back and let the previous rate hikes through the economy, possibly only a 25 base point hike at the next meeting. Using current market rationality, a 25 base point hike is basically a signal of a 25 base point cut 6 months from now. February 1st will be an interesting day. And where did we end up? Nowhere really. Premium sellers win again. Tough month for the picking direction. Okay, let's move on to the trade suggestions. Bank of America, we had it as an underperform, sell, BAC, opened at $33.81, and the suggestion was to sell the February 36 call, which you could have sold at 22 cents with a stop at $35.98. Unfortunately, it was stopped at 73 cents on February 1st for a $51 loss. If you went the stock route, you entered on January 23rd at $34 but were stopped at $36 on February 1st with a loss of $198. Coinbase Global Inc. We had it as an underperform, sell, avoid. Coin opened at $55 and the suggestion was to sell the February 85 call, which you could have sold at 50 cents with a stop at $82.14. Unfortunately, it was stopped for $7 on February 2nd for a $650 loss. If you went the stock route, you entered on February 2nd at $85 and were still in the open short at the end of the cycle with an unrealized gain of $1,980. Advanced Micro Design Inc. We had it as a market perform, sell. AMD opened at $72.28, and the suggestion was to sell the February 75 call, with a stop at $71.28. Unfortunately, AMD opened above the stop and there was no entry. If you went the stock route, you entered on January 23rd at $76, but were stopped at $85 on February 1st, with a loss of $900. ExxonMobil Corp. We had it as an outperform, hold, BTFD. XOM opened at $113.64, and the suggestion was to sell the February 105 put, which you could have sold at $1.12 with a stop at $87.30. It wasn't stopped. It could have been bought back at 5 cents for a profit of $107. If you went the stock route, you entered on February 2nd at $110 and were still in an open long at the end of the cycle with an unrealized loss of $128. Cisco Systems, Inc. We had it as a market perform, sell. CSCO opened at $46.89, and the suggestion was to sell the February 50 call, which you could have sold at 37 cents with a stop at $48.35. Unfortunately, it was stopped for 94 cents on January 26 for a $57 loss. If you went the stock route, you entered on January 23rd at $46.89, but you were stopped at $49 on February 2nd with a loss of $211. Verizon Communication Inc. We had it as an underperform, sell, avoid. VZ opened at $39.99, and the suggestion was to sell the February 41 call, which you could have sold at 95 cents with a stop at $40.23. Unfortunately, it was stopped for $1.04 on January 25th for a loss of $9. If you went the stock route, price would have needed to rise into the range of entry at $43.50 to $47 before providing acceptable risk reward within a micro downgrade with a target at $32, which it didn't do, so moving on. CSX Corp. We had it as an outperform, hold, BTFD. CSX opened at $32.10, and the suggestion was to sell the February 32.5 put, which you could have sold at $1.10 with a stop at $31.35. Unfortunately, it was stopped for $1.55 on January 24th for a $45 loss. If you went the stock route, you entered on January 23rd at $32.10, but you were stopped at $31.35 on January 24th with a loss of $75. Wells Fargo and Company, we had it as an underperform, sell. WFC opened at $43.92, and the suggestion was to sell the February 44 call with a stop at $43.92. Unfortunately, WFC opened above the stop and there was no entry. If you went the stock route, you entered on January 23rd at $43.93, but you were stopped at $44 on January 23rd with a loss of $7. Intel Corp, we had it as an underperform, sell, avoid. INTC opened at $29.32, and the suggestion was to sell the February 30 call, which you could have sold at $1.10 with a stop at $29.73. Unfortunately, it was stopped for $1.27 on January 23rd for a $17 loss. If you went the stock route, price would have needed to rise into the range of entry at $34.50 to $40 before providing acceptable risk reward within the micro downgrade with a target at $24, which it didn't do. Let's move on. Microsoft Corp, we had it as a market perform, sell. MSFT opened at $241.10, and the suggestion was to sell the February 245 call, which you could have sold at $6.60, with a stop at $244.34. Unfortunately, it was stopped for $8.25 on January 23rd for a $165 loss. If you went the stock route, you entered on January 23rd at $245, but were stopped at $258.58 on February 2nd with a loss of $1,358. Gilead Science Inc. We had it as an outperform, hold, BTFD, GILD opened at $82.76, and the suggestion was to sell the February 80 put, which you could have sold at $1.44 with a stop at $70.81. It wasn't stopped. It could have been bought back at 5 cents for a profit of $139. If you went the stock route, you entered on January 23rd at $82.76. And we're still in the open long at the end of the cycle with an unrealized gain of $200. Comcast Corp, we had it as an underperform, sell. CMCSA opened at $39.25, and the suggestion was to sell the February 42.5 call, which you could have sold at 44 cents with a stop at $41.48. It wasn't stopped. It could have been bought back for 5 cents for a profit of $39. If you went the stock route, you entered on January 23rd at $39.25, and we're still in the open short at the end of the cycle with an unrealized loss of $13. Uber Technologies, Inc. We had it as an underperformed sell. Uber opened at $30.68, and the suggestion was to sell the February 32.5 call, which you could have sold at $1.19 with a stop at $32.09. Unfortunately, it was stopped at $2.08 on February 2nd for an $89 loss. If you went the stock route, you entered on January 23rd at $30.63, but were stopped at $32.50 on February 2nd for a $187 loss. Marvell Technology, Inc. We had it as an underperform, sell. MRVL opened at $40.20, and the suggestion was to sell the February 42.5 call, which you could have sold at $1.20 with a stop at $42.20. Unfortunately, it was stopped for $2.20 on January 23rd for a $100 loss. If you went the stock route, you entered on January 23rd at $43.50, and were still in an open short at the end of the cycle with an unrealized loss of $64. NVIDIA Corp, we had it as an outperform hold. BTFD NVDA opened at $180.64, and the suggestion was to sell the February 200 put, which you could have sold at $23.20 with a stop at $174.49. It wasn't stopped. It could have been bought back for 5 cents for a profit of $2,315. If you went the stock route, you entered on January 23rd at $180.64 and were still in the open long at the end of the cycle with an unrealized gain of $3,224. That was huge. Tesla Inc., we had it as an underperform, sell, avoid. TSLA opened at $135.87, and the suggestion was to sell the February 185 call, which you could have sold at 77 cents with a stop at $181.92. Unfortunately, it was stopped for $9.17 on February 1st for a $840 loss. If you went the stock route, you entered on February 2nd at $195 and were still in the open short at the end of the cycle with an unrealized loss of $1,331. Weyerhaeuser Company, we had it as an underperformed sell. WY opened at $32.35, and the suggestion was to sell the February 34 call, which you could have sold at 30 cents with a stop at $33.38. Unfortunately, it was stopped for 77 cents on February 1st for a loss of $47. If you went the stock route, you entered on January 23rd at $32.35, but you were stopped at $34 on February 1st for a $165 loss. Schlumberger Limited, we had it as an outperform /hold /BTFD. SLB opened at $57.50, and the suggestion was to sell the February 50 put, which you could have sold at 27 cents with a stop at $40.94. If it wasn't stopped, it could have been bought back at 5 cents for a profit of $22. If you went the stock route, you entered on February 2nd at $53 and were still in an open long at the end of the cycle with an unrealized gain of $34. General Motors Company, we had it as an underperformed sell. GM opened at $35.68, and the suggestion was to sell the February 41 call, which you could have sold at 18 cents with a stop at $40.82. Unfortunately, it was stopped for $1.20 on February 2nd for the loss of $102. If you went the stock route, you entered on January 23rd at $36.50, but were stopped at $41 on February 2nd for a $450 loss. Lastly, Citigroup Inc. We had it as an underperform sell. C opened at $51.05, and the suggestion was to sell the February 55 call, which you could have sold at 16 cents with a stop at $53.49. It wasn't stopped. It could have been bought back for 5 cents for a profit of $11. If you went the stock route, you entered on January 23rd at $51.05 and still were in the open short at the end of the cycle with an unrealized loss of $37. And that's it. There was a net gain of $461 on the option side and a net $570 gain on the stock side, a solid beginning to the year. If you are viewing this review and are still not sure about subscribing, request a free trial edition at general@912financialgroup.com and you'll get the latest editions. No worries, no credit card needed. Thanks for joining me. Again, if you have any question or comments, please send them to general@912financialgroup.com. Please like and subscribe.